If you are a small business owner, you know that you probably have to do quarterly estimated tax payments. So that's what this video is on. Like, do you have to pay? When do you have to pay? And how much should I pay? Those are the things that we're going to be talking about in this video, just for that, you know. So the very first thing is if you have a CPA or a tax preparer and you owed money last year, then they probably should have given you a little a tax payment coupon, okay? And say for instance, if you owed $1,000 last year at your tax return, what you do is they divide it into 4 quarters, and then each one of those coupon payments would have been for $250. So if you have that, you can go ahead and send that in. If you think that it may not be correct, you can reach out to your tax preparer and have them send you one based off of your income. So let them know. For instance, say last year you had a small business that just started and you had a net income of say 10 grand. Then you probably would have owed the 10 or the $1,000 last year. But say you moved up to $100,000. So if you had that big of a jump, or even like 20 or $30,000 jump over the prior year, you probably want to talk with your tax preparer and be like, hey, things are going really well. And they'll ask you a few questions like, well, how much is your net income for 2024? And they'll be able to give you a better idea of what to pay. So if you don't have a CPA or a tax preparer who's been preparing your taxes, how do you figure out how much to pay? Well, here's just a really quick tip. Go ahead and take your gross income. And the reason why I'm saying gross income is because you can tell what that is. That's your top line revenue. And just go ahead and times that by 20%. And that should be a good enough estimate to send in. So the 20% is for your federal income tax. This works to say your revenue, your gross revenue for your business is $300,000 or less. You should be okay. Remember, if you end up overpaying when you do file your income taxes, you will get that money back. If you did not pay in enough, it will ask you to pay the difference. And if you do have someone doing your taxes, please let them know how much you sent in as an estimated tax payment and when. They need to know both of those things, how much and when. So if you have a state, if you're in a state that has state income taxes, go ahead and take that gross income number and times it by 5%. That should be good enough. These are things that you can do on your end. If you have your bookkeeping done, say you're in QBO, or even if you're using Excel, you should be able to figure out what your gross income is. So if you are doing really, really well in your business and say your small business is making over $300,000, you could go ahead and add 5%. So instead of sending in 20%, send in 25%, and you should be okay. And remember, if you overpaying, you will get your money back. Okay, so who has to pay in? So if you own a small business, then you have to pay in, but it's only if you're making money. So I always go off of, did you owe money last year? So if you owed money last year, you're probably going to owe money this year unless things have just gone terribly downhill. If you did not owe money last year, say your spouse has a W-2 income and takes out a lot of money in federal withholding, then you may be okay. Um, if everything was about the same as last year and you didn't owe last year, then you probably don't owe this year. But the other thing is does your business have net income? So you have to take the gross income, all of your income that you receive from the business, and then minus all the expenses, and that's where you get your net income. If your net income, if you have a net loss, you're not going to owe taxes. It's only if you have a net income. And if you have an LLC or you're a sole prop and you're not an S corp yet, this is where we're paying in the Social Security and Medicare taxes. So if you have an income, a net income for your business, you'll end up paying the Social Security and Medicare taxes for sure. And we can go ahead and figure that out for you. Okay, so what are the due dates? Well, the reason why I'm doing this video today is because on January 15th, that's when you're supposed to pay in your quarterly estimated tax payment for last quarter. So January 15th for 2024, that's when you're supposed to go ahead and figure out what you should pay into the IRS. And then the next due dates are for first quarter, we're paying in April 15th. For second quarter, we're paying in June 15th. For third quarter, we're paying in September 15th. And then for fourth quarter, we're paying in January 15th. You might have heard that there's some penalties. So, what are the penalties? So I wouldn't stress about penalties because penalties are very, very little. It's when you do not file your tax returns. That's when the IRS gets really mad at you, and that's when they start charging very high penalties. So even if you have to file an estimate or do an extension for your tax return, do the extension and then make sure you file your tax return by October 15th. Even if you owe a lot of money that you cannot pay, file the tax return. It's when the IRS doesn't know if it's when you have no tax return, they don't know what's going on. Do you owe money? Do you not owe money? That's when they start giving you a high penalty on not filing. So if you can't pay come October 15th, there's payment plans available. I mean, you will have a less of a fee for not filing with interest and penalties for not being able to pay on time than you will with not filing at all. So as long as you are filing your tax return, don't worry about the penalties. Like there'll be very, very little. It'll be nothing to, call home over. It won't put you out of business, that's for sure. So how to get around not paying penalties. So you don't want to pay any penalties at all. So what you have to do is take a look at last year's tax return and make sure that you are paying in at least 100% of last year's tax return for this year. If you paid at least 100% of last year's tax return this year, then you'll be okay. Or you have to pay at least 90% of your estimated current year's taxes. So it's kind of an either or on this one. However, if you make more than $150,000 worth of self-employment taxes, you have to pay at least a 110% of last year's taxes to avoid any tax penalties. And then just make sure that you're paying by the due dates. The IRS really likes to see if you owe, make sure you're paying in quarterly. Otherwise, they can get you for not paying in evenly across all the quarters. So that's another one just to keep an eye out for. So, how do you pay? So, one way is you can have those payment coupons that you get from your tax preparer that you can go ahead and write a check and mail the check in, or you can go to the irs.gov and you can go to payments, online account for individuals. That's where you want to go ahead and make a payment. I actually just did mine earlier today. It's really simple. You can either create an account or you can do it as a guest. You'll just have to know your social security number, where you lived last year. So if you have your last year's tax return, that would be really good to have up and handy because you'll need that. And then what you're doing is making an estimated payment. So it's actually called a 1040 ES. So you'll see that drop down box because it'll ask you what you're doing. And then you'll want to put the year. So we're still paying in for the year of 2024. When April comes around, we'll switch it to, we're making an estimated tax payment for 2025. And that's if you're paying for the year 2025. If you still owe on last year's taxes and you're doing it electronically, make sure you're paying for you're selecting the year 2024 if you owe more money come when your tax returns due in April. So you'll want to make sure that you're putting like your social security number. That is when you're in there, make sure because these are all for personal taxes. So make sure you're using your social security number. If you The only type of business where you would have to make estimated tax payments is a C corp. That is the only entity type that does not flow through to you personally. But if you have an LLC, a sole prop, a partnership, 1120S, all of those are flow throughs, and I would just use your social security number. And say you're a female and you're married and your spouse is the first name on the tax return, I would actually use your spouse's name and social, because I've seen it in the past where, say that the husband has a W-2 job and then the wife has her own business and she's making all these estimated tax payments under her own social security number and name. And it just kind of gets messed up with the IRS side of things. There's been times in the past where this has happened and it's taken a while to get it cleared up for them to be able to find the spouse's name and make sure it gets applied to the correct tax return. So whoever the first name is on the tax return, that is who you want to file those estimated tax payments under. And then the next question I always get is, do I pay it out of my personal bank account or do I pay it out of my business bank account? I don't care where you pay it from. You can pay it out of your personal. Technically, it is a personal expense. So if you want to pay it out of your personal bank account, just make sure that I know, or whoever's doing your tax return knows, print out that receipt, keep it of when you made the payment. Or if you want to pay it from your business bank account, like I tell a lot of my clients to use Profit First. So you will have a tax bank account sitting there full of money just for you to pay your estimated tax payments when you have your taxes due. So if you want to use that bank account, that is fine. That is okay. Just for you to know, when it gets coded in a business, it gets coded to an owner's draw account, because technically you cannot write off your personal taxes from your business. I don't care if you pay them from your business account, just make sure it gets coded to an owner's draw equity account. All right. I believe that is everything that I can recall off of the top of my head on estimated tax payments, all the questions that I normally get. If you don't like my quick estimates of using 20% off of your top line revenue and you want a more detailed one, that is a service that we do offer. I will need things like your pay stubs, your last pay stubs for the year, your P&L. I'll need a lot of information, like do you have kids? What are their ages? So it'll be a conversation that we need to have, but it is a service that we do offer. Make sure you go ahead and subscribe to this video. If this was helpful to you, and go ahead and give it a thumbs up. And if ultimately you need more help as your small business is growing and you're looking for tax write-offs and just what should I be doing? There has to be a better way from paying Uncle Sam less. Go ahead and book that discovery call. The link is below. Thank you. Have a great day.